Borrowing money to invest in passive income amplifies your investment returns. My name is Darius.
And I'm Carmen. That's right. He said it. In today's video, we are going to share 4 types of passive income strategies you can use with life insurance in order to borrow funds and make more money. But before we jump into that video, make sure you subscribe to our YouTube channel. And if you find value in our videos, please like our videos because it significantly helps us grow on YouTube. Now, let's jump into the content.
Now, here's why I say borrowing money to invest in passive income increases your investment returns, because 2 things happen when you spend money. When you spend money, you lose your money to earn interest, or you're paying interest. And when we borrow money, what we're able to do is leave our money in whatever investment vehicle it is earning interest, and we're able to use somebody else's money at a lower interest rate and invest it at a higher interest rate.
Yep. Because let's be honest, what really happens? If we don't have the funds to invest, what are we doing? We're borrowing from 401ks. We're borrowing from current investments so that we can pay for something else to pay Peter and Paul and Jimmy and everybody else, right? And we've done it. We're speaking from experience. We know what it's like to be able to dip into your 401k to fund life expenses because things happen and we didn't plan to have savings. So now we have to tap into our investments. You know, that's a whole nother soapbox. But the idea is, in this video, we want to share with you the idea or the ideology of being able to borrow money using a whole life insurance policy, because that's one benefit of whole life insurance policies, is being able to access the cash and use it to your discretion to make more money.
Right. Now, yes, there are ways, a ton of different ways you can borrow money. You can borrow money from a bank. You can borrow money from different financial institutions. You can borrow money from your cousin. You can borrow money from your retirement. You can also borrow money from whole life insurance. This video, we're just talking specifically about borrowing money from a whole life insurance policy. Yes, there's other ways of borrowing money. We know that. And what you have to do is look at what you have access to and borrow the money at the cheapest rate that you have access to. It's just, for us, the cheapest way for us to invest is through whole life insurance. Now, we came across this strategy because we were investing in real estate, and one of the ways that we invested in real estate is through hard money, which is at 20%. Now, we did check the box of the fact that we borrowed money at 20% and we invested it at a higher interest rate. So then we learned about borrowing money from a whole life insurance policy, which is a significantly lower interest rate than our hard money loans at 20%, and we were able to keep that difference. The really important thing to understand is the difference that we're able to make, the arbitrage we're able to make from the investments and the cost of borrowing the money.
Totally. Yeah. And the best part about this whole process, let's go into the first point. So the first point we want to stress is rentals. So rentals is really an amazing way to think about people are using your home in exchange for money. There's so many different ways that you can spin it, but we want to keep it as simple as possible. And of course, there's going to be an initial exertion of energy in finding the rental and making sure that everything works out and that it is going to be a cash flowing asset, but it's all about that setup cost, because what you want to do is have that rental be able to pay you every single month in addition to your mortgage and give you a little bit of profit on the back end. So the whole premise behind using a whole life insurance policy, for example, is being able to use the cash value to invest in a rental property, whereas you may have had to go to the bank or source other source of financing. But in this case, if you have access to a whole life insurance policy with adequate cash value, you can invest in property.
Right. And again, we're borrowing money from our life insurance policy so that our money can continue to earn interest. Yes. And we can invest at a higher interest rate in which it costs us to borrow the money.
Absolutely.
The arbitrage that we get in between. Now, it's not just the fact that we can borrow money to buy single family homes. We can also do real estate investment crowd funds. And the reason why I like the crowdfunding is because, let's say the hotel that we're invested in, we don't have to have $6 million to invest in this property, but we get to sit at the table with other investors that have significantly more money than us, and we can learn from the actions and decisions and the way they go about doing things, and we can apply it to our scale with our rental properties.
Yeah. So point number 2 is also interest payments. So think about peer-to-peer lending, right? So the whole concept behind peer-to-peer lending is people need access to capital. And if you have access to capital that you're not doing anything with, hence the cash value inside your whole life insurance policy, you can lend that money out to friends and family or acquaintances, whomever the case may be, with principal and interest terms to ensure you're getting all of your money back, plus interest, right? And of course, the investment in this peer-to-peer lending opportunity and that arbitrage and what it costs you to get the cash from, to loan it from the life insurance policy versus what you're charging is all the money that's coming back to you.
Right. Now, a good example of seeing this in real time is the banks. We go to the banks to borrow money for our cars, our houses, whatever under the sun, whatever our credit score allow, we can get a loan from the bank to do. We're just, again, saying that we can create this same source of income, passive income on our own scale, just like the banks, by using the access to the funds that we have within our whole life insurance policy to generate passive income through peer-to-peer lending.
Absolutely. So the third point that we want to talk about is business acquisition financing. So how many times do we want to get involved in businesses, but we don't have the time to do so? Well, if you have the money to be able to do so, you can acquire businesses and utilize those businesses to help you create cash flow just by accessing the money, again, that you have access to. So why not look at opportunities? Maybe instead of looking at real estate, you can look at other businesses that might fit your desire, where you can buy or have a share in that business so that you can also partake in the profits.
Right. Now, the nice thing about this is you don't have to start over from zero. You can buy an income producing asset or business acquisition that's already producing the income, and you just step in as the financer of this particular business. You own it. Now you own the passive income that is generating.
Absolutely.
Now, the next point that we want to talk about is dividend. Dividend is probably the most passive thing that we can do because we just get on like a Fidelity or M1 or something like that. And we do our research and we understand what dividend stocks that we want to invest in. And the nice thing about using borrowed funds is, again, you have to invest at a higher interest rate than what it costs you. And it's easy to do that because that portfolio is something that's producing income on a consistent basis. So you earn dividends from investing in stocks. You can leverage your income to get exposure in the market. Now, the reason why this is so important to me is because when we talked to our financial advisor, he was saying, Carmen and Darius, you guys need to have market exposure. And the way we get market exposure now is through the investment in dividend stocks. And I'm not saying that any one of these is the one size fits all or the one thing you have to commit to. It's something that you need to have multiple streams of income from different asset classes. And what we're trying to do is just support those ideas that it's not always you making money, it's your money making money. That's the direction that we want to get in, or where we want to go. And just because we use whole life insurance as the vehicle, it's just another source of income. It's another source of income alternative to investing using hard money loans like we started with. It's an alternative to using the bank's funds like most of us do. It's an alternative to borrowing from our retirement when things come up. There's other sources of income that we can use to create passive income. Now, the nice thing again about passive income is it's a great way for you to earn extra income without having to stop doing what you're doing now, without having to work any harder, without you having to quit your day job. You can do it in parallel with what you're already doing.
The best time to make passive income is when you have active income, because you're realizing that you don't have to build so aggressively with the passive income because say you lost your active income, for example. The idea would be to start your passive income play so that your passive income play can end up supporting and overfunding the active income, and you can remove yourself from whatever it is that you're doing. So these are just ideas and tips and tricks that we're continuing to share with our Wealth Nation community so that you all can think outside the box. You don't always have to have access to your own capital in order to make more money. It just takes creativity. And we happen to know one particular product that we use all the time to make passive income plays. Now, were you going to say something?
I was going to say money is meant to be spent. And if we hold on to it, we're losing money.
You're not making money.
We're not making money. If you're not making money, you're losing money. There's only two options you have. So if you're going to spend money, spend somebody else's money and make more money than what it costs you to borrow theirs.
Absolutely. So if you want to learn how to buy a policy and start applying these tactics, then definitely click on the link below so that we can help you create the right plan for your journey.
And make sure you check out our next video. We talk about 5 assets that you need to have for life.
And don't forget to own your own lifestyle.
Or someone else will.